What's shaking, crypto crew? Get ready for a rapid-fire rundown of the news that's moving the markets and shaping the future. The pace is blistering, the stakes are sky-high, and you are locked in for the absolute must-know updates. We've got major moves in corporate digital asset strategies, a fascinating look at potential shifts in major market indexes, and so much more. You don't want to miss a second of this. It's all happening right here, right now. First up, we're diving deep into a Japanese powerhouse that's making waves with its bold, singular commitment to Bitcoin. This company is now holding a staggering amount of the digital asset, positioning itself among the top global corporate owners and even surpassing some very high-profile names. How did they get here, and what does this mean for their strategy moving forward? Then, we're shifting gears to explore a potential seismic shift in the financial world. We'll be looking at how a major player is reportedly on the cusp of breaking into one of the most prestigious market indexes out there, a move that could redefine how traditional finance views digital assets and corporate treasuries. What are the requirements, and what's the timeline for this potential game-changer? Next, we're talking about a significant strategic pivot that could have ripple effects across the entire industry. We'll unpack how a prominent company, known for its pioneering approach to digital assets, is making moves that could see it become the very first crypto-focused entity to gain a spot on a major stock market index. What does this mean for institutional adoption and the broader perception of cryptocurrencies? And finally, we're keeping our eyes on the horizon, examining how macroeconomic winds are potentially reshaping the relationship between two of the oldest and newest stores of value. We'll break down the divergence between Bitcoin and gold in 2025 and what strategic rebalancing might be at play. Don't go anywhere, it's all coming up. Hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. A bold bet pays off. Japan's Metaplanet surges ahead. Metaplanet, a Japanese firm, has dramatically increased its Bitcoin holdings, now possessing 20,000 BTC. This significant accumulation makes it the sixth largest corporate holder of Bitcoin globally, outstripping even entities linked to prominent figures like Donald Trump. The company's aggressive strategy involved raising approximately $884.41 million through overseas share sales, specifically earmarked to fuel its Bitcoin acquisitions. This move underscores a powerful trend of Japanese corporations increasingly embracing digital assets as a core component of their financial strategies. The capital infusion through share sales, while substantial, did see Metaplanet's stock price experience a slight dip of over 5% following the offering, closing at $831 on September 1. This reaction highlights the market's sensitivity to large-scale capital raises, even those aimed at acquiring a highly valued asset like Bitcoin. Despite this short-term volatility, Metaplanet's long-term vision remains firmly fixed on Bitcoin as a crucial store of value. Metaplanet's approach is notably distinct from other Japanese firms, such as Gumi, which has adopted a more diversified cryptocurrency strategy, investing in both Bitcoin and XRP. In contrast, Metaplanet maintains a singular, unwavering focus on Bitcoin. This concentrated strategy suggests a deep conviction in Bitcoin's potential and a clear objective to leverage it as a primary corporate treasury asset. Gumi, on the other hand, is exploring various avenues, including staking protocols for its Bitcoin holdings and a significant crypto fund in partnership with SBI Holdings, a known proponent of XRP. Metaplanet's commitment, however, is to a pure Bitcoin play, aiming to solidify its position without immediate diversification. The company's journey to accumulating 20,000 BTC has been rapid, starting from zero holdings in April 2024 and reaching this substantial figure in less than a year. This swift expansion demonstrates a high level of commitment and strategic execution. With its current holdings valued at over $2.2 billion at an approximate Bitcoin price of $109,487, Metaplanet's financial positioning is significant. The firm has expressed no immediate plans to liquidate its Bitcoin reserves, reinforcing its stance on Bitcoin as a long-term investment. The broader implications of Metaplanet's aggressive accumulation are significant. It signals a growing institutional acceptance and strategic integration of Bitcoin into corporate balance sheets, particularly from non-Western markets. This trend could encourage other corporations to explore similar strategies, potentially increasing demand and further legitimizing Bitcoin as a global reserve asset. The firm's unique focus and substantial holdings make it a key case study in the evolving landscape of corporate digital asset management. Hold on tight, because the next story reveals how a major company is poised to make history in the mainstream financial markets. Get ready as we explore the potential inclusion of a crypto-centric firm into the prestigious S&P 500 index. Bitcoin and gold, a tale of two assets in 2025. As we look ahead to 2025, a fascinating divergence is emerging between Bitcoin and gold, two assets often discussed as stores of value. Macroeconomic shifts and evolving investor strategies are creating a dynamic environment where these traditional and digital assets are charting different courses. This period could see significant rebalancing as market participants reassess their portfolios in light of changing economic conditions and technological advancements. Historically, gold has been the go-to safe haven asset, a reliable hedge against inflation and economic uncertainty. However, the rise of Bitcoin as a digital store of value, often dubbed digital gold, presents a new paradigm. Factors such as rising interest rates, geopolitical instability, and inflation concerns are influencing investor behavior. While gold might see steady demand as a traditional hedge, Bitcoin's appeal lies in its scarcity, decentralization, and potential for higher returns, albeit with greater volatility. The macroeconomic landscape of 2025 is expected to be shaped by several key trends. Persistent inflation, even if moderating, could continue to drive interest in assets perceived as inflation hedges. Central bank policies, including potential shifts in interest rate strategies, will play a crucial role. For gold, this environment typically supports its value as investors seek tangible assets. Conversely, Bitcoin's performance might be more sensitive to technological adoption, regulatory clarity, and its increasing integration into mainstream financial systems. Strategic rebalancing within investment portfolios will be a critical theme. Investors are increasingly looking beyond traditional asset classes to diversify and enhance returns. This includes a growing allocation to digital assets like Bitcoin, which offers a different risk-reward profile compared to gold. While some investors may maintain or even increase their gold holdings for stability, others might be tilting their portfolios towards Bitcoin, seeking exposure to a potentially high-growth, uncorrelated asset. The divergence isn't just about performance, it's also about utility and perception. Gold's value is deeply ingrained in centuries of tradition and physical properties. Bitcoin, on the other hand, derives its value from its underlying technology, network effects, and its role in a rapidly digitizing world. As more institutions and individuals gain access to and understanding of cryptocurrencies, Bitcoin's narrative as a digital store of value is strengthening. Furthermore, the regulatory environment for digital assets will continue to evolve, impacting how both Bitcoin and gold are perceived and treated by institutional investors. Clearer regulations could further legitimize Bitcoin, potentially drawing more capital and narrowing the performance gap with gold, or even leading to periods where it outperforms significantly. The interplay between these macroeconomic forces and strategic asset allocation will likely define the relationship between Bitcoin and gold in the coming year, presenting both challenges and opportunities for investors. Prepare for a groundbreaking development that could cement digital assets in the heart of traditional finance. We're about to reveal how a pioneering firm is on the verge of achieving a historic milestone in the public markets. Strategy eyes S&P 500 spot, a crypto first. Strategy, a company that has boldly pivoted from software to become a pioneer in Bitcoin treasuries, is reportedly on the cusp of a significant milestone: qualification for a potential listing on the prestigious S&P 500 index. This development, if realized, would mark the first time a company with a primary focus on cryptocurrency as a corporate treasury asset could be included in this major U.S. stock market benchmark. The company's journey to this potential inclusion has been fueled by a strong second quarter performance, during which it reported $10 billion in net income. This financial success has been accompanied by a steady growth in its Bitcoin holdings, reinforcing its commitment to its Bitcoin-centric strategy. Strategy has reportedly met all the stringent requirements for S&P 500 inclusion, including a market capitalization that significantly exceeds the $8.2 billion threshold, robust trading volumes surpassing 250,000 shares daily, a public float of over 50%, and consistent positive earnings over the past quarter and the last 12 months. This potential S&P 500 inclusion is more than just a corporate achievement. It represents a major step forward for the institutionalization of digital assets. It signifies growing acceptance and integration of cryptocurrencies within mainstream financial markets. The announcement could come as early as Friday, September 5th, according to reports. The company, which officially changed its name from MicroStrategy in February, has long been a vocal advocate for Bitcoin as a superior long-term store of value for corporate treasuries. CEO Michael Saylor has frequently compared Bitcoin to prime real estate, emphasizing its scarcity, borderless nature, and ease of transferability, contrasting it with traditional assets like cash, which can be subject to inflation, and gold, which incurs high storage and security costs. Strategy's strategic decision to transition from a software firm to a Bitcoin-focused entity highlights a broader trend of digital asset adoption by established corporations. For other companies considering incorporating digital assets into their capital allocation strategies, Strategy's filings and operational model offer valuable insights into crypto custody practices, an area that legacy financial institutions have traditionally approached with caution. The company has acknowledged the risks associated with Bitcoin custody, including the potential loss of private keys and vulnerability to cyberattacks, in its most recent annual report. While the majority of its Bitcoin is held with institutional-grade custodians under protective contractual agreements, the legal and regulatory framework for digital asset custody remains a developing area. The risk of a custodian filing for bankruptcy, potentially treating the company as an unsecured creditor, remains a concern that could impact access to its Bitcoin holdings and lead to financial losses. Nevertheless, Strategy's pioneering approach and its potential entry into the S&P 500 could pave the way for greater institutional participation in the digital asset space and reshape how corporate treasuries are managed in the future. Get ready to analyze the market impact of this significant corporate move and what it means for digital asset adoption. We're diving into the implications of a major company's potential S&P 500 inclusion and the subsequent flow of institutional capital into the crypto sphere. MicroStrategy's S&P 500 push, redefining institutional crypto exposure. MicroStrategy's ongoing strategic commitment to Bitcoin as its primary corporate treasury asset is reaching a critical juncture, with the company reportedly meeting the criteria for inclusion in the S&P 500 index. This potential move represents a landmark event, signaling a significant shift in how traditional financial markets perceive and integrate digital assets, and could dramatically alter the landscape for institutional capital flow into the cryptocurrency ecosystem. The company, which rebranded from MicroStrategy to Strategy, has consistently advocated for Bitcoin as a superior store of value. Its substantial Bitcoin holdings, acquired through a series of capital raises and strategic purchases, have positioned it as a bellwether for corporate adoption of digital assets. For MicroStrategy to be considered for the S&P 500, it must meet rigorous criteria related to market capitalization, liquidity, domicile, and financial viability. Reports suggest that the company has not only met these requirements, but has done so with a market capitalization significantly above the index's threshold, strong daily trading volumes, a substantial public float, and consistent profitability over recent periods. The implications of such an inclusion are far-reaching. For institutional investors, particularly those with mandates that restrict direct investment in cryptocurrencies, inclusion in the S&P 500 could provide a regulated and familiar avenue to gain exposure to Bitcoin's performance through a well-established equity index. This could unlock significant capital flows from pension funds, endowments, and asset managers who have been hesitant to invest directly in digital assets due to regulatory uncertainty or operational complexities. MicroStrategy's position as a publicly traded company already offers a degree of accessibility, but its inclusion in a major index like the S&P 500 would amplify this effect exponentially. Furthermore, this development underscores the growing maturity of the digital asset market and the increasing acceptance of Bitcoin as a legitimate asset class. It validates the strategy pursued by companies like MicroStrategy, which have bet heavily on Bitcoin's long-term value proposition. The company's detailed disclosures regarding its Bitcoin custody and risk management practices also serve as a valuable reference for other corporations and financial institutions navigating the complexities of digital asset investment. While the exact timing and confirmation of its S&P 500 inclusion are pending, the mere fact that MicroStrategy is reportedly on the verge of qualifying highlights the evolving nature of corporate finance and investment strategies. It suggests a future where digital assets are not just niche investments, but are increasingly integrated into the core strategies of major corporations and accessible through mainstream investment vehicles. This could set a precedent for other digital asset-focused companies, potentially paving the way for broader institutional adoption and a more mainstream acceptance of cryptocurrencies. Stay tuned as we analyze the potential impact of this major market development on the broader adoption of digital assets. We'll explore how this could reshape the financial landscape and influence future investment strategies in the crypto space. And that's a wrap on today's rapid-fire updates. We saw Metaplanet solidify its position as a top Bitcoin holder, potentially influencing corporate digital asset strategies globally. We explored the diverging paths of Bitcoin and gold in 2025, highlighting macroeconomic shifts and strategic rebalancing. Plus, we covered Strategy's potential S&P 500 inclusion, a move that could be a game-changer for institutional crypto exposure, and delved into MicroStrategy's similar push to redefine institutional capital flow into the crypto space. Don't miss out on any of these crucial developments. Make sure to like this video, subscribe to Bitcoin Bulletin, hit that notification bell, leave a comment with your thoughts, and follow us on all our social channels to stay ahead of the curve.